Hello, everybody. Welcome back to Spotlight in Business. I'm your host, Tammy Defoe, and I have the pleasure of introducing to you today, Mike Butean. He is a financial security advisor with MacDev Financial, and he's going to be telling us more about himself. So welcome to the show, Mike. How are you doing today?
Thank you very much, Tammy. How are you doing?
I'm doing very well, thank you. It's great to have you on the show today. And I've known you for quite a while in that, right? And I know how great of a service you offer your clients. So can you tell us more about yourself and what you do?
So about myself, I'm married with 2 kids, and part of the family is also our dog, Bonnie. So that's all my family actually here in Canada. So I was actually born in East Europe, immigrated here in 2003. Oh, sorry, 10 years. So 2003. And since then, I'm working my way up I had several backgrounds. My initial was in engineering, moved into sales. And since 2017, I started to learn the ropes and to get my licenses, including life insurance. And then now I'm working to get my professional designation as financial advisor. And that's everything actually started in 2018 to get my licensing and everything. So since then, I'm in this business. And what I'm doing, I'm helping people reaching their lifetime financial goals. I'm not a product-oriented person. I'm more goal-oriented person. And where I'm starting is usually where not all of the financial advisors are. I'm starting with your cash flow situation to bring more life of your money first. Then based on the goals and having more life of your money, we will look to provide you with a financial plan. Could be retirement plan, could be child education plan, could be also including the cash flow plan, obviously is part of it. And then we look also how to protect you, like with life insurance and or living benefits. That's kind of me in a nutshell.
Perfect. And what made you get into this profession?
As mentioned, I was born in East Europe from actually not a very wealthy family. And it's not like we always struggled with money, just that it was a scarcity of it. And when you grow like that, you always strive to be better, to do better. They were, however, very supporting. So I actually finished a university with my parents' support. But I'm a do-it-yourself and grow yourself type of person. So I'm not like born wealthy or so. However, I can tell you now that I'm debt free, which is not too many people can tell about themselves. And my goal is actually to be financial free. And that's what I'm trying to teach my customers, how to be debt free, how to create a strong base to become financial free.
And that is the life, right? That's the dream, right? We want to be financially independent. We don't want to have to worry about how much we're spending on groceries, or we want to go to a restaurant and that if they were open, we can get takeout still, we want to be able to do that, right? And vacationing, all those great things. And so, like what can you do for people that they're not doing for themselves? A lot of people are just like, I can do my own finances. So why should they see you instead?
Well, a lot of people actually think they can do their own finances. But from the multitude of people I used to work with, I already noticed they are actually, most of them, they don't know to properly run their cash flow, because that's where everything starts. You lose a lot of money in your cash flow, and I can find actually over $3,000 per family per month per family with the cash flow plan. You can imagine how much money you need to generate in order to get that $3,000 per month. So because there is no financial education in school, actually most of the people struggle. At least 90% struggle. Yeah, there are wealthy people and they are doing well. I also implement in my business what the wealthy people are doing to grow and to get more. So I'm sure, I hope I answered your questions.
Yeah, no, absolutely. Right. And I think the thing you mentioned to me before is the accountability issue, right? Because isn't that also an issue some people have? Like they'll just spend money on whatever. But with you, that you're going to help them stay on track for their goals.
Yeah, like when, I keep mentioning the cash flow plan. Yeah, that's exactly like, a lot of people say they will do some exercise and they will reach their goal. But a lot of them give up and they need an accountability coach. I will be also that coach. So it's not like I'm just throwing a plan at you and that's it. Is we put together the plan. I make you understand how is it working. I'm helping you to improve the plan, but also the accountability is also part of this. And this accountability is valid not only for the cash flow side, is valid also for the investment side. So I'm also doing like 6 months reviews, and depending if the plan actually moves well, I will move to yearly reviews, but that's because life happens and things happen, things change. And sometimes we don't know what and so that's where I'm coming.
Perfect, right? And a lot of people know I was a personal trainer in the past, and it's just like financial planning. You get way better results faster if you have that coach, whether it be said for personal training, for fitness goals, or financial advisor for your financial goals, right?
It's even more into it when you think about it, like our grandparents had pensions, okay? So, or they did not live so long. Our parents had pensions, or some of them, or most of them had pension, but they are already living longer. Now, ourselves, we don't have neither. We don't have pensions, and we live longer. So when you think about it, that you will leave at least 20% in retirement, where is the money coming from? Because the CPP is covering 25 to 33%. I'm saying 25 is growing to 33, but most of us won't get that 33%. And that's only somewhere around 10,000 to 20,000 per year. That's also depending how long you lived in Canada, because if you're immigrant, then it's starting to come less and less and less. So very important, especially for immigrants, to learn from a specialist. The moment when you don't do that, you just lose. And it's tough even for the Canadians, because the Canadians are not teaching this in school either. So.
No, and I think Canadians have the highest amount of debt. Right? I think of like many countries.
Well, Canadians owe over $1.58 per every dollar they earn. So they owe a lot of that. Now, I'd never compare with other countries because there is no reason to compare. It is better to look in your own backyard than to compare. So the idea is that 59% of Canadians retire in debt, and that's a huge number, which should not happen. Mm-hmm. I'm coming to be able to help you put order in your debt, but also to make some smart investment, because there are all kinds of investment in the market, and there are safe investment and there are risky investment. Now, the safe investment, what means that? You can have a deviation. Deviation, what is like compared with what I promise, the deviation could be 1.2. Where you get that deviation from the promise? Because the stock market, the mutual funds, and all the others, the deviation is more than 15%. So is it the same thing for you if you retire with $1 million or with $850,000? I'm not so sure is it, because you cannot make it up anymore. So it's the same if you retire with $1 million or 999. So it's no big deal. You lost $1 here and there. And so that's what I'm proposing to all my customers: safe returns, but also a decent rate of returns with my plans. So.
Exactly, right. And that's the thing where a lot of people said are just not educated, right? And, a lot of times, that, obviously the most common way people invest is through the bank, right? Everyone needs a bank account and stuff like that. So it's just kind of the way people go. But what's the difference between seeing you and someone going to see the advisor at the bank?
Well, there is, first of all, the fiduciary duty. So whoever is an employee for an institution, whatever that institution is, could be like insurance or could be bank, could be a specific investor, they are actually have fiduciary duties to their employee, not to their client. I have fiduciary duties to my client. So I'm acting as a broker. I can deal with specific insurance companies, with specific banks, and I'm always looking, you can imagine what is in their client best interest. Why is that? Is because it's more than for just helping them. A happy client will be also happy to refer me more. So everybody wins. This is the situation when everybody wins. And this was unfortunately one of the reasons I got into this business, because I learned that it was put on the TV show that a bank employee doesn't need to give an advice to the client. They are in position to sell to the client. I'm in the position to give an advice. And that's one of the main things why I'm in this business as well.
Exactly, right? That's a great point, and in terms of selling, it's not just about them, like let's put you in some sort of investment, which by the way is their own bank's investment, where you can do Fidelity and McKenzie, you can do all the different companies, but also their job is to sell debt, right? Give you a higher credit card limit, give you a line of credit, give you all this stuff, right? They want it because they want to make money off the interest. But if somebody wants to have more wealth, right, then if you're paying more interest, because people will spend it, if you get more credit, people will spend it usually, then it's not actually the person's best interest, especially if some people have difficulty controlling their spending. If you've got all these credit, right, limits and stuff like that, and but for you, because you want to focus on their wealth, which means decreasing their debt faster and giving them the best sort of investments, then I think that's, overall the best way you can advantage you have over the people at the bank.
Well, there are all kinds of situations. There are situations when actually managing that could be secondary, because the investment could, if you do some investment where you can do both, so do an investment which can in turn also helping paying the debt, instead of just directly putting the money into paying debt. Because if you start and wait 10 years just to pay debt, and after that start investing, you might lose some opportunities. So there are ways where you can cut from the debt, but also do some investment at the same time. And that's always, again, depending on each personal situation. Surprisingly, I find people that they were having loans with paying interest of 50%. Believe it or not, I was so surprised. And it was so easy, actually. It was in their hand, in their power to move that at a lower interest rate. They just did not know. So there are a lot of things. There are a lot of also investment where you can grow at the highest rate that your interest. But yeah, it's every situation is different, in all honesty. So whoever I was able to help, I was finding them. Like let's say I had a small business client. They were an interesting couple. So the owner was making the money, but his wife was spending the money. So I had to come to implement the cash flow plan, and then I explained to his wife, you know what? He's making 50,000 per month. You're spending too much money here. So you can also generate by controlling the spendings and by that unification to reduce that spending with this much. While not making it now, you're not necessarily making that 50,000 which your husband is, but by putting this together, that he is focusing on making the money and you focusing on not spending that much, and that unification, I put them in a position that they are able to reduce their debt significantly. They also had that, when you have a small business, that's a clear situation to put them in a program where they were having safety in place, like a life insurance, but putting also for a plan for retirement and child education. And that was fantastic that they are also, even now, they are very happy about how everything works. So there are all kinds of situations, and the more you teach them, that's what I'm trying to do, to not sell something, to provide education and to make them understand where is this coming from and why is this done like that.
Look, you made a lot of great points, Mike. And, the one thing is, it's not just about, just paying that, not investing that, but maybe more of looking how you can have maybe lower interest things and stuff like that, right? But just in terms of the bank, they want to give people more and more credit, right? Which can put them in a bad situation, obviously making people aware of, you've got your short-term desires versus your long-term goals, right? And getting people in that right frame of mind and on that plan. And then they see, okay, yeah, I really didn't need to spend $1,000 last month on whatever. And now all of a sudden they're reaching their goals. And on top of that, we know that the biggest reason for, marital breakup is money, right? So by having you coming in and being able to, be that objective third party to have that conversation to get the people on the same page, because a lot of times some couples, they don't even talk about money, right? Then that goes a long way, really long way. Right. And you also emphasize education a lot, right? So, and I know that you have some extra education above, just the kind of new financial advisor coming in. Can you tell us more about that?
So I have 3 types of webinars which I'm promoting, which are related with the way I would help them. So one is like I said, one of the foundation things for building a strong financial house is the living benefits. So I have every second week, I have living benefits, critical illness, cancer, carotid and the sickness webinar. I'm co-hosting, actually the presenter is somebody with over 20 years in the business. And I'm hosting myself a couple of webinars. One is about cash flow, how you improve your cash flow and credit score, and how you do debt unification and so. And that's once per month. And plus, I'm having one about retirement. And I mentioned why is that important, because we have to plan for at least 20 years for after retirement. Life expectancy in Canada, for your information, is around 85. So from 65 to 85 would be that. And in that seminar, I'm promoting one of the things which I'm very proud to say there are only a few advisors in Canada doing that, the bank on yourself strategy. So to grow your money safely and predictable year over year, even when the markets are crashing like now. So yeah, 3 types of webinars I'm doing constantly.
Right, that's great, right? But can you just name the different certifications or licenses you have, just to, because I just want to point out that you do have the additional qualifications above just like someone, kind of just starting out in the business?
Well, first of all, I have the Certified Cash Flow Specialist designation. Again, less than 1% of advisors have that. Most of them, they are having just a spreadsheet to give you and going through the spreadsheet and based on that. But this is actually a strong program launched by a Canadian for Canadians. I'm also Bank on Yourself professional. This I mentioned is already the Bank on Yourself strategy. Also, less than 1% of advisors are familiar with this. Even some companies are not very familiar with this. I started in 2020 to work on my designation as professional financial advisor. I'm actually at the middle of this program now, and it's taking 2 years. So I started in 2020. It should finish in the spring of next year. And recently, I hired a mentor, which is part of the $1 Million Roundtable. And I myself, I'm also part. I joined the Academy of the $1 Million Roundtable. For your information, this is also top 1% in not only in Canada, is worldwide, because it's a worldwide organization. And it's not about how much money, how we serve our clients to reach that level, because it's not about just making the money, it's about helping our customers reach their goals.
And you talk a lot about educating your clients, right? And, like how much does it cost for people to come and get this education?
Well, how should I put it? All the education, this is a profession where a lot of information is actually coming for free. And I also have actually my YouTube channel where I'm answering questions from my clients. Feel free to check that. So that's all kind of free information. Are there costs involved? Yes, there are costs involved for, let's say, for a cash flow plan. I'm also providing some deals there, whoever they join my webinars. But when we look into the difference of the plan, besides the cash flow plan, those are commission based. So I won't be charging anything. But again, the information is kind of free. So.
Yeah. So now these webinars you host, are there free webinars?
Yeah, there are free,
okay,
all of them, there are free webinars.
Yeah.
I need to mention that whoever is coming will also get some promo from me. Could be a book, could be, besides the information, could be a deal on the cash flow plan. Whatever it is I can offer at that day will be for their benefit.
Perfect. Well, that's great, right? And I mean, that's the thing where, whatever people can get for free is great. So you know what? It doesn't cost you anything. Go out to his webinars. He always does a great job. And, we can put the links to your website or your group or wherever you have the webinars posted, but just go in and get some free education, right? And I know we talk mostly about the cash flow, the investment, debt and stuff like that, right? But there is another part of a financial plan. What if you do a great job with your cash flow and you're saving towards your goals and then you get sick, right? So what type of things, do you offer your clients to help, mitigate that risk?
So I already mentioned some of it. It's actually the living benefit side, which is critical illness, cancer care, and also the cancer protection and accident and sickness coverage. We even have plans for families, believe it or not, for this situation. And of course, there are the life insurances. And I'm not limiting myself to say that I'm selling only whole life or whatever, because again, each situation is different. And some people might be in a tough situation, but they still need protection. When you think about it, you don't have to think the life insurance is for me. The life insurance is for your family. So if you have a family with kids, if one of you would pass away, the other parent would be in a tough situation to raising one or two kids. This is one of the things. The other one, let's say you don't have a family yet, but you have a mortgage. Would you like to leave your partner to kind of lose the house, what you purchased together? So it's not only about themselves. They have to realize this is about the people around them. And not to say, a lot of people think, oh, I'm young, I don't need insurance. But think about when you're young, things can happen as well. And the advantage is way, way less expensive. So it just makes sense. It just makes sense.
Exactly. Plus, it's less expensive. So that means for the rest of your life, it's like less expensive. But also too, the older you get, when you tend to have more health problems, then it can be more difficult to even get approved, right, for coverage.
That's a very good point, Abby. Thank you very much for reminding that.
Yeah, absolutely. Right. So while people have no medical issues and that while they can get it cheap, get it now. Right. And that, because if you do wait, either maybe you get declined or you have to go with a company that, the premiums are so high that it's not affordable. Right. Or it's just more, might be more than you want to be spending on your insurance. Right.
But even in that case, actually, there are options to do insurance without medical, or there are people who are a little bit older, but still not too old, like 50 or over. And for that case, they might need to do medical, but they don't like, the needle. And in that case, there is an option where you can avoid that, which is called kind of no medical insurance. So there are options, and yes, the only problem is they are more expensive. But, you know, I had clients with asthma, they wanted to get coverage and they need to get coverage because they had family, and it's obviously they realized that they had to get it. And yeah, they can cover it. There are insurances which cover and not necessarily very expensive. So.
Yeah, and I think it is a good idea, right? You said even if you are a little bit older, right, it is a little more expensive, but it's important, like whether you have no savings, right, or you've worked really hard for your savings. If you get sick, if you have to take the money out, like how many years did it take you to accumulate the money with the income, the interest, or the dividends or whatever? And if you have to take all that out and you're starting from zero, right, or less, and of course you're close to retirement now, you have a lot less time for that money to compound on itself, right? So, that's the thing. Even if it does, cost you more when you're, 40 or 50 or whatever than if you were 18 or something like that, it is. And I know people who have put it in place because, they don't want to be taking from their RSPs or whatever, because that's another issue as well. If you take from your RSPs, maybe it puts you in a higher tax bracket, right? Or, just a multitude of different scenarios. What if the markets are down? Right? The markets are down and you need the cash to take out the money, you are never going to get that money back. It's like the worst case scenario. So it definitely is good to have protected. Now, other things I've heard from people, they say, well, I have insurance through my work, right? So why do I need to get my own insurance plan? So what would you say to those people?
Well, the insurance from work is actually always it's a term insurance. So it's usually ending by the time you need it the most, by the time you need it the most. And actually I had a lot of calls of people reaching that age 65, and they are looking at advertisement put on media that they cost this much, I mean, very small amounts. And when we do the quotation, is not even close because as you said, the health situation is changing. So the recommendation is to look at long term if you can. So if you're in the position to look for long term, then you should buy something which is for whole life. Of course, again, if there is a money situation, yeah, the term will do it until you reach certain age. But after that is not even worth it to purchase it. It's that expensive. Some people say they are insuring themselves, but that's not exactly covering their needs. So yeah, that's what's happening. Whatever it is provided through a company, through insurance, through the benefits, is ending at 65 or 75. But you are living up to 85 or so. Most of the issues come after that, after 75. If you want to know how things are going in retirement, the first years you spend lots of money because you still have lots of energy. You go traveling and whatnot. After a while, you settle and you're more quiet. You don't spend too much. But after that, after a while, also like 75 or 80, now you start also spending more because you need money for medicine and things like that. If you're not properly covered and don't have a proper plan, where is the money coming from? My question is.
Yeah, and on top of that, it's nice to think that we're going to have, people who are working are not self-employed, that you're going to have your job till you're 65. Right? A lot of times, there's downsizing that go on. People lose their jobs, right? Companies move overseas. I mean, you can't guarantee you're going to have the same job.
Nothing
right?
is guaranteed these days.
Right.
That's for
so
sure.
So if you have your own personal policy, right, then it has that you guarantee protected, whether you have that job or not, that you're going to have that coverage, right? But there's also the like critical illness, disability and stuff like that. So a lot of people think, okay, I've got disability through work. Obviously the same scenario. If you lose your coverage, you have no insurance, but let's say they're like, no, I know my career is guaranteed, and I already have disability insurance through my work. So why would I need to get more disability insurance?
So first of all, you need to see if that disability is actually covering your needs. Second of all, there are disabilities who are adding up to that disability. So there are disabilities where is no reason to add up, but there are disabilities which are adding up. So in case you're not properly covered, you can have the extra amount coming from another insurance. And why do you need disability? Well, what's happening in case you lost your job or whatever, or not your job, when you are not able to work? Who's covering you? Because that's not, and in all honesty, a lot of disabilities are long-term. They are available through work. And what do you have in place for the short term? This is something, again, have to be checked if you are properly covered, which I cannot make an assumption now you are or not. That needs to be seen. And I even noticed, like in recent, I have a customer now, they had the option, but actually they had to pay for this disability even through the company. And they did not take it. And now they will have the discussion with me, because that's one of the things where I'm going through everything and I'm checking, so do you have this coverage done? And why not? Well, it costs. Well, everything costs in life, but what is actually more important? To have insurance on your home, on your car, or one on you? What is the most important asset? Think about it. It's you, because if you don't work, where is the money coming from? Really, where?
Yeah, for sure. And, you know, if you add up how much you make on a yearly basis, if you're disabled the rest of your life, how much income are you losing? Right. You know, and then as well, like a lot of times the disability through work that cuts you off after 2 years. Right.
That's,
so
yeah, that's depending how the plan. Each company is different, honestly. So I was working myself for a company. They had the top of the top of the top of the plan. Wherever I was going, everybody was like, "Oh, you have this as well?" Do they have all of the employees like that? No, like most of them, they don't actually. They're very rarely they are properly covered. Small businesses, they don't have the money to give that many benefits to their employees. So most of them, they don't.
And then of course it comes to self-employed people, which, you know, we don't have a pension, you know, we don't have someone contributing to our pension and, you know, like, you know, and insurance and stuff like that. So, you know, like, how do you help self-employed people? What do you recommend for them?
Well, again, it's the same situation. We have to go through the same thing with them in order to propose something. There is an assessment I'm doing for each situation. So, and from that assessment is coming out the needs of life insurance, disability, and critical illness. But from the cash flow, which I mentioned, I will do the cash flow too, is coming out also how much money you have. So actually is going into a little bit of a compromise here, because you never, I mean, there are a few people, yeah, they can pay for all the coverage, but most of the time, you're in a position to make a compromise. Which one is better? Like I would say, in a way, critical illness. Critical illness is a very strong case to take critical illness. And why? Because every second person is expecting to get cancer in Canada. And you're not dying from cancer now because everything is advanced. However, the money you spend, it's very much, it's unbelievable high. That being said, there are options with critical illness to have return of premium at maturity or death. The return of premium at maturity usually is pretty expensive, but at death is not. What means that? The money, if you somehow you don't become, you don't get into that situation to have cancer, heart attack, or stroke, the money stays in the family. So it's a win-win situation. The disability, again, there are different types of disabilities. So the most problem with disabilities are when you do with own occupation or whatever occupation, but there are a different type of disability, which actually I'm selling, which is covering you 24 hours, no matter what you're doing. So there are ways to be covered properly. And in the situation when you reach that point that you are disabled or you get sick or you get cancer or whatever, you also have the finances to support your needs, which are the most important part. You don't need too many, problems on your head. It's enough that you are sick, then you have to have also the finance on your head. What are you doing now? What can happen? You can lose your home. You can lose a lot of things when you're not properly covered. So.
Yeah, because I mean, people too, they're getting chemo and you have to go to the doctor's appointments, the hospital and stuff like that. Then you're not working, right? And you're not feeling well in that. And, so it definitely is something to, you need to have in place. And like you mentioned, the great benefit of a lot of critical illness policies, not through the work, but through your own private policy, is that you can get most of your money back actually, if you don't end up getting the critical illness. So it's really like a really win-win situation. You can't really go wrong with the critical illness insurance. And besides the fact that, I mean, most work plans, they cover heart attack, stroke, and cancer, but some of the plans you offer, they cover way more than that.
Well, there could be like 21 condition, 18, 21, 3 condition. It's up to each situation. And yeah, like we can see what is more beneficial for you. Some of us could have a very healthy family history. That doesn't mean you cannot get into a difficult situation, unfortunately. And but I wanted to mention that all this, whatever I'm mentioning, can be done actually for small business owner, and those are some of my target markets. And I need to mention that there are actually tax savings available, and pretty big tax savings available for small business owner. Even there is a concept which I'm promoting, which is using a healthware trust. So that is turning your health expense into business expense. And that's, again, tax advantage. And a lot of this, like you can take, I can actually offer health and dental benefits for small businesses, and they can kind of have it, all of that almost for free, because it's coming from the tax. So when
exactly,
you think about
right?
it, and you're in that position, there is also tax advantage where I can help you. And I'm working with accountants and other professionals. This is not something, when you put a plan together, is not only you. So there are also sometimes lawyer involved, accountants involved, and I'm having my my contacts if the person who's working doesn't have those contacts, including for if you need for a will and all those situations. So financial advice is not something you are doing it yourself. It's a team effort. When you think about especially the wealthy people, they have a team of accountants, a team of financial advisor, a team of lawyers. Do you think they make the decision only by themselves? No, they're asking each team, what do you say about this? That's how each of us should think. And when they would look at hiring me, they should expect that I have as a support some of the people of this team. So it's not on one man effort. Plus I have my mentor, of course, to help me.
Yeah, absolutely. Right. And, that's a great point. And for people who maybe they're not at that really high, 1% level, but you want to be getting there, right, or getting close to there, that's where having that professional advice, right, makes a difference. The studies show if you have a financial advisor, especially a really highly qualified one like yourself, right, who does work with the team as well, that, you're going to be more wealthier, you're going to be better off, right, than doing it on your own. So, and you know what, it's a free consultation to call you up. People, if they're just not quite sure, they can just even call you up, ask a few questions and that, get to know Mike and that really great guy and that who truly cares about you and that, and about making your situation better. I mean, the more money he can make you, the better it is for him, right? So he's definitely invested in getting you, putting you in the best shape possible, right? And also too, just the fact that it's a satisfaction, that you've helped people to get to that that next level.
Yeah, Tammy, thank you very much. That's exactly true. And whoever is interested in any of what I was telling you today, they can go and look. My website is exactly my name, mikebutean.com. They can find the events there. They can find the blog there. They can find my services there. And of course, they can find my contact information, which I think you will put it in down the page.
Yep.
Yeah.
Yep, for
You will
sure.
find my contact information, but it's really easy to find. You can actually Google me, Mike Butean, and
There you go.
So,
Exactly. That's great. Yeah. So Mike Butean, you see his name right now in the video, but I'm going to paste it below with his website and all his contact information. Like you said, you want to know about his free webinars. It's free. You got to take it, right? Go there, get that information that you have questions. But I mean, we just kind of touched it. We didn't even touch on every single thing you can do. There's segregated funds. There's a million different things that you offer that you can help people with. And again, it is about looking at each situation on a case-by-case basis, right? And what is important to you. But, in terms of entrepreneurs and, a lot of people, my whole client base are entrepreneurs that, we don't have a pension. So having someone like yourself that can help us make sure that we're going to have that pension in place, our self pension, that we can have it right and we're protected in case our health goes or whatever, it's great. So, reach out to Mike, get some more details, book a free consultation, go to his free webinars, and, he's there to help you out. So thanks so much for coming today, Mike. I really appreciate you coming on our show.
Thanks for having me, Tammy. And thank you, everybody who is watching. Feel free to get in touch with